Hey guys, welcome back. Today is 4/26/18. It's about 3 a.m. here on the East Coast. Um, as promised, here's another video. I'm assuming you're back because you want to learn how to trade, so let's get into it. Today I want to talk to you guys about moving averages. Moving averages are indicators that we use to track trends. They indicate, the direction the trend is going. A moving average just means that it takes, however many you set. It's going to take that many candlesticks and average them. Um, Two types of moving averages we use are the simple moving average, or SMA, and the exponential moving average, or EMA. The EMA, it just averages the same amount of, say, time periods or candlesticks, but it gives more weight. It's weighted. It gives more weight to the more recent candlesticks. So I can show you. I like the EMA just because of that weighted average. But if we come in here to inputs, we can change the length of however many candlesticks we wanted to average together. So when the length is 9, that means it's counting the previous 9 candlesticks and averaging them together. And when you change, the time, if I change it to day, it's going to average the previous 9 days. If I change it to minutes, it's going to average the previous 9 minutes. Okay, so I'm going to show you two strategies that we use with the EMA. And keep in mind that moving averages are lagging indicators. They only tell you what's happening after it happened. It doesn't average in the movement until the candlestick closes. So it's all lagging information. It's really only telling you what has already happened. So here's one way we can use the EMA. If I add another EMA to this, and oops, let's say I change one of these to 3 and change the color to something really visible. No, that's too blurry. It blends in too much. Okay, that's better. If I make it bolder, it's better. All right, yeah, we'll just go yellow. Let me change this from to blue. Okay, so what we have here is a matter of fact, I want to space this out a little more. I might change this. Might change this from 9 to 12. Maybe 13. All right, so check this out. Whichever EMA is the shortest amount of periods, that's going to be your fast moving average. That's going to hug the price the closest. It's going to stay on it, like white on rice. And your other moving averages are going to space out a little bit. You can use moving averages in what we call or what I call a cross strategy. So whenever the moving averages cross, you just basically follow the trend that way. So when the yellow moving average crosses, or the fast moving average, the low number crosses to the top, that's indicating an upward trend, and you would place a buy when you see this fast moving average come to the top. So here it crosses, right? You wouldn't place the buy until the candlestick closed, really, because you wouldn't actually know where it's going to stop. You know, if you placed a buy here in the middle of the body and then it came down here, you would have, you would have screwed yourself. So you would have got in like right here. Here you see it cross. So maybe you closed it and took the loss. One thing you got to know about strategies is that no strategy is 100%. But with this strategy, you will make money and you will win more than you lose. And I like to use these strategies during bull markets. I feel like they work better in bull markets. In my opinion, I feel like the upward trends in bull markets last longer than the downward trends. So let's just say you're placing buys and sells every time it crosses. You placed a buy up here, then it crossed down here. You sold it. You lost money. You placed a buy right here, and it doesn't cross again. Nope, that's not a cross. It didn't cross. Still hasn't crossed. This is where it crosses, this candlestick. So this is where the candlestick closed. You would have closed your trade right here, and you see you've made money. Let's see. Let me show price range on that. Okay, so this is where this candlestick closed, and it crossed, and then this is where you got out at. Nice 7% gain. And let's measure that loss you took right before that. You placed a buy here, and then it crossed. So you lost 2% and you gained 7%, roughly. And then you can you can put this on any stock, any currency pair if you're partial to Forex or any cryptocurrency. And you can see if you just stick to the strategy, you'll win some, you'll lose some, but you're going to win more than you lose if you know which conditions to apply the strategy in. If you're in a market where you can't short, meaning I can't place a sell here and gain money as it moves down, then this strategy is really only good for like bullish markets. You wouldn't want to use this in a bear market to try to squeeze out money because the upward moves are going to be small. The upward moves are going to be quick and going to be small, and it's going to be like this downward move was here. Okay, so now I'm just going to teach you guys this last swing trading strategy that you can use with moving averages. I like Philicone's EMA swing trading strategy because he uses Fibonacci sequence numbers as his moving averages. So as far as the inputs, he has an 8 moving average, a 13, a 21, and a 55. These are all numbers in the Fibonacci sequence. I like to change these so that I can line them up. So keep in mind when you guys do this on your own, your colors are going to be different, so don't get confused. Keep in mind that I changed the colors. But check out this 55 moving average. The 55 EMA, which is the slow moving average, when it crosses to the top, it's signaling a downtrend. And when it crosses to the bottom, it's signaling an upward trend. When it's on top, it's pushing the price down. When it's on the bottom, it's supporting and it's pushing the price up. It also acts as a level of support and resistance. So with this swing trading strategy, and again on TradingView, you have, let's zoom in. On TradingView, they will have these arrows that come in when you add a strategy. So let me zoom in so you can see it. So when you see the arrows come in, there's a green arrow here. You would place a buy. And you would have just rode this until you see it cross. And there's your red arrow. This is where it finally crosses. And you can see how much money you would have made there. So we got in right here. About 6%. Which is good. I mean, it's profit. Eventually you guys are going to learn how to get all or catch the tops, but we have to combine more indicators in order to be more precise or more accurate.